Oil continues to break down. Traditional markets open up strong today, and Bitcoin responds positively. Is this a real rally or a selling opportunity? Find out in today's exciting episode of Breaking Bitcoin.
I'm Joseph Abadi from Blockchain Economics, and you're watching Breaking Bitcoin.
Welcome back to Breaking Bitcoin. We are live every afternoon at 12 p.m. Central Standard Time, your daily source for everything markets and finance. I'm your host, Justin Wise, lead analyst and senior mentor at crackingcryptocurrency.com. Hopefully you guys are doing absolutely fantastic today. We've got an incredible show for you. Before we begin, a lot of you guys are probably sitting at home, and if you are sitting at home with not a whole lot to do, not a whole lot of lockdown, you can only clean your garage so much. It's an excellent time to ditch the trading strategy that is not working for you and develop a verifiable systems approach to your trading. Join our community. Take advantage of our signals and trade setups, premium indicator suite, pathways to profit strategy building course, community mentoring, much, much more. Find all the information that you need at premium.crackingcryptocurrency.com. That's premium.crackingcryptocurrency.com. Like I said, we've got a fantastic show for you guys today. It's another day, another huge attack on a DeFi network, another decentralized finance protocol. We're also going to be talking about oil as it continues to decline. We're also going to be talking about Bitcoin's price as we move off of the baseline and everything else. So I want to get right into it. Of course, if you guys are new to the channel, make sure to like and subscribe. That's the only way YouTube shares our content with other individuals, because it's hard times out here for cryptocurrency channels. Anyways, guys, let's get right into it. All right, our first story of the day. As I said, another day, another high-profile attack on a DeFi protocol appears to have taken place. This time, it was on the decentralized network known as PegNet, which saw a group of miners in control of about 70% of the network's hash rate develop an attack using their majority share of the hash rate in order to manipulate the price of JPY. So, P yen, a PegNet issued stablecoin tied to the Japanese yen, which was kind of exclusive to their network. By submitting fake data to the network, the scheme managed to inflate a target wallet balance from about only $11 of JPY to about $6.7 million worth of assets. But it seems the attackers weren't able to actually liquidate their funds, that is, pulled them off of the exchange, and they moved right along. So let's take a closer look at what actually happened. PegNet, where this went down, is a decentralized network built on top of the Factom protocol, and it aims to provide users with a decentralized stablecoin marketplace, all pegged to various assets, including fiat currencies, commodities, and others, even cryptocurrencies such as Bitcoin. So this is from GitHub. So one developer writing in a GitHub blog post detailed the complete attack on PegNet, describing the 4 mining entities who collaborated on a type of 51% attack together on the network. And to be more specific, what these bad actors / miners actually did was centered around manipulating the price of a stablecoin, backed by the Japanese yen, that the platform called PJPY. It's a tongue twister. Miners on the network typically collect price data from several oracles and APIs before they submit it to the network, and that information is added to the blockchain. Each block requires about 50 independent data points to base transactions upon. In this attack, however, the rogue miners were responsible for submitting 35 of the top 50 price submissions. The remaining 15 price feeds were dropped in favor of values being provided by these miners who had the majority share. And over the course of about 20 minutes, with their operation beginning, starting with a wallet balance of just $11 worth of these JPY tokens, the manipulated price data skewed the exchange rate of the token to the PUSD rate being provided to the protocol, with PUSD being another US pegged stablecoin on the PegNet platform. Now, with the operations on the wallet balance completed using the falsified data, their wallet balance surged to more than $6.7 million in the PUSD stablecoin token value of the PUSD stablecoin token. But in order to get the funds washed and onto an exchange for sale, the attackers immediately tried to convert their PUSD trove into the network's native peg token. However, this is where they were stopped. Because the protocol doesn't allow for quick conversions of such size. The tokens were stuck in time lock. They were stuck in limbo. So the plan apparently stalled in their conversion into PEG, and they were unable to proceed with the dumping onto the markets. So, foiled by their own ingenuity. So David Johnston, one of the leading figures behind PegNet, confirmed the 51% attack was deployed. But due to the protocol's safety features, the conversion was paused, and the attackers inevitably decided that the best course of action was to merely burn their PEG balance by sending their balance into the network's burn address. So they manipulated these funds and they just burned them. Still, there are some unanswered questions surrounding this whole attack. Was it a single entity behind the attack, or did an actual group of miners collude to execute this scheme? It seems that the attacker has since reached out to PegNet in order to explain their actions, claiming that they were merely doing a pen test, which is a penetration test of the network, in code logic, merely performing an exercise to identify potential vulnerabilities in order to notify core developers if they found anything. Now, this is still early and unconfirmed, however, so we'll definitely have to follow up on that one. But, that sounds pretty convenient. When asked about the motives behind the attack, Johnson here stated that he can't speak on the intent of the person's actions. However, their actions accounted to generating pass nets and later destroying those assets. And it seems to him to have been more of a publicity stunt than a real attack, given how quickly it was executed and resolved following. Now, the attacker's decision to merely burn the falsely generated assets seems to roughly mirror what we saw go down with the D-Force hacker, the one who drained that protocol for $25 million over the weekend, after learning that authorities had obtained his IP address. He decided to return the funds rather than continuing any further with the heist. I'm pretty sure that doesn't negate what one has done, though. So Johnson insists that PegNet is going to be reviewing some of their Oracle mechanisms in order to ensure that they're able to withstand a 51% attack like this if it were to be attempted again. He also said that users' funds are SAFU, if we would, and were never in danger because PegNet has no reserve or collateral held in a pool. There were no common user funds to drain. Unlike the D-Force network, it seems, the attackers were only able to manipulate their own wallet balance through attacking the data feeds of Oracle inputs. Well, of course, if you can modify the value of the ticker symbol on the right-hand side, the quote pair, well, you can grossly inflate the value of what's on the left-hand side. Now, Johnston said that as DeFi grows, more dangerous attacks will follow in time. Of course it will. This is probably just the beginning, as there is more monetary value. And we saw this with Bitcoin, right? We saw this with Bitcoin for the longest time, and still to this day, right? You have a decentralized currency that you cannot call a bank from because there is no central point of control. If you can steal those funds, they are irrevocably stolen, right? And nobody can steal them from you unless they're smarter than you, right? So it seems a hacker's delight is to attempt to get Bitcoin. This is why security is absolutely important, right? So for individuals who are not at the top of their game when it comes to computer protocol, computer security in general, right? For those who aren't familiar with the intricacies of the blockchain, the best thing for you guys to do is to utilize cold storage and to just follow best practices, right? There are, we've made videos on this. There are hundreds of videos here on YouTube. There are lots of guides on the internet about how to properly secure your BTC funds. And again, as I've said, I fully support a decentralized finance. I think that it is certainly the future. However, I do want to caution people in locking up hundreds of thousands, if not millions of dollars on these platforms, because there's a lot of risk in that. Whereas, I would argue that something like Bitcoin has proven itself to be fairly safe. But again, the more convoluted and complicated you get with that as well. All right. But the key obviously here is building systems. It seems kind of like PegNet, where individual users aren't affected by the actions of others on the same network, which is pretty interesting. So let me know what you guys think down in the comment section down below. Our second story today is going to be, is Bitcoin digital gold? So most of us already know that Bitcoin has this digital gold narrative behind it. And it goes a little something like this. Because Bitcoin has assets that have the fundamental characteristics to precious metals such as gold, i.e., and more so, honestly, being decentralized, fungible, scarce, and difficult to create, i.e., not controlled by a central authority, accepted around the world, and being deflationary in nature, Bitcoin is due to become a new age digital precious metal asset, right? Digital gold. With a market cap of gold given some time. That is the narrative. However, according to the Kansas City branch of the Federal Reserve System, Bitcoin may be getting way too far ahead of itself with the gold narrative, and they largely tear this notion to shreds in this recent document published by their central bank office. So in a note published on April 15th, and this has gone mostly unnoticed by most of the crypto community, the Federal Reserve Bank of Kansas City claimed that Bitcoin is decisively not a safe haven, noting that Bitcoin has acted more like a full-on risk asset than anything that could be possibly considered approaching digital gold. The KC branch of the Fed cites Bloomberg data showing how Bitcoin operates with a positive correlation to the S&P 500 index to a level significant at the 5th percentile. Then, during periods of economic stress, assets such as 10-year treasury bonds or gold, which have typically operated with a slightly negative correlation to the S&P 500. However, this shows that Bitcoin moves with a traditional market like the SPX and cannot be considered, therefore, as achieving safe haven status because it doesn't actually move with gold in times of economic stress. Now, many would agree with the facts presented by the Fed in the sense that, yes, Bitcoin still does show correlation with the S&P, and it's still subject to wild price swings and volatility, so it's not so much that BTC is not digital gold. It's more a matter of it's not a digital gold yet. It's in the process of arriving at a safe haven status, which takes time. Gold has been traded for thousands of years. Bitcoin's been traded for 10. The other thing to note here also is even with so first off, citing volatility is arbitrary, right? Because gold moves at times with greater volatility than cryptocurrency. So does the S&P 500, right? If anybody's been paying attention, right? The gains week for week on those seem to be fairly similar lately. For example, in Bloomberg's latest edition of the Bloomberg Intelligence Report, their section titled Crypto Outlook featured a key takeaway that Bitcoin is slowly but surely maturing towards trading like gold does, a sign that it is indeed becoming digital gold. In that Bloomberg report, they did bolster a case for Bitcoin being on its way to becoming digital gold, specifically citing the adoption of BTC futures markets on the CME, how volatility is continuing to decrease on a macro scale, the growing correlation between gold and cryptocurrency, and finally, how interest and users are continuing to grow on the BTC network day after day. Then, of course, there is the block reward halving set to arrive in less than a month, which means Bitcoin's inflation rate is beginning to seriously dwindle with over 18 million coins. The majority of the supply has already been mined. And most of the world's fiat currencies are currently on a runaway printing spree in recent weeks, meaning that Bitcoin is growing into the narrative of scarce digital asset even more so at the current time. So while Bitcoin might not be able to be considered digital gold just yet, there is a strong case here to urge investors to have some exposure, right? Even traditional analysts are urging investors to have some exposure to Bitcoin and cryptocurrencies in general, to grow together with their precious metals portfolio in response to ongoing changes in macroeconomic trends. Now, if we take Arthur Hayes, BitMEX CEO, at his word, for instance, he recently chimed in with his outlook in his blog post, writing how he thinks that investors should buy as much BTC and gold as they can in preparation for what he calls the monetary regime shift currently in progress, and how central bank policies will flood the markets with cash in the coming years. So where do you guys stand on the Bitcoin gold narrative? This year has been fairly tough year to date, and probably tested the resolve and faith of a lot of crypto fans in March's massive crash, as it always does. If you guys think back to the end of 2018 or the beginning of 2019, there was a lot of confidence and resolve tested. Bitcoin's price has since recovered, and things are looking relatively sunny leading into the halving. But do you find the honeymoon phase of Bitcoin to be over? Have you become more cynical of what's to come, given the events of 2017 and now 2020's crash and recovery? Were you expecting an economic collapse by now and to be crypto rich while society crashes down around you? Or do you see this as the long road to victory, and that we're still in the maturation phase of BTC and cryptocurrency before it really proves itself as that hard asset like gold? Let me know in the comment section down below, guys. With that being said, we're going to take a quick, brief break while we switch over to today's analysis. Don't go anywhere, guys. All right, guys, welcome back. We're going to get into today's analysis portion. So we've got Bitcoin currently trading at $7,115.50. Ethereum pushing up to 181.75. We've got the SPY E-mini futures 27.82, 10-minute price delay on there, and CME futures at 71.75, 10-minute price delay on there as well. All right, so we've got a lot to cover. The first thing that we're going to get into is, of course, throwing back through this chat. All right. Challenged Investor, thank you so much for the $5 donation, my friend. He says, please take a look at gold and gold stocks like AU and GOLD. Suppliers can't meet demand. The opposite of oil is happening. I'd love to, my friend. Let's take a look, actually. Put that on the list. We've also got Midwest Attempts, Damian Hughes, Anton Libre, DeFi Guy, Rhino TD, MT Coiner, Crypto Jack, Forza World, Yorick, Mr. Ether, Forrest Bitcoin, Max X. Good to see you guys. If I missed anybody, sorry about that. Thank you guys so much for the support. All right, we will start off today with our daily Bitcoin analysis. Things are fairly simple. First off, let's note the halving still coming up on the 13th of May, 2020. That timeline hasn't changed whatsoever. Long-term analysis in the form of the volume profile. This is what I published yesterday. Give you guys an update on this. Things have not actually changed too much. We are at the weekly point of control. This is the fair market value range of BTC. This is overall a neutral area. It's going to depend on your overall directional bias. Simply looking at this chart, we can see overhead, we have resistance beginning at 8,000 to 8,200. In my experience, pushing through that gives us acceleration to at least 10,000, 10,200. Breaking above that, we begin to get into the oversold levels of, overbought levels of BTC. And of course, down below us, overall support at 4,000 to 3,344, which is really the back the truck up area of Bitcoin's price, which it has been for the last almost 3 years. All right, so again, point of control coming in strongly right in between 6,000, 6,800. This is an overall consolidation area pushing up from here. Gets us, we have low volume nodes above and below us, right? Regardless of the fact that there is more heavily traded volume above the point of control than below, that actually makes it harder to actually break to the upside. It's easier to break to the downside from here. The one positive thing to note is that the value area, of course, has crept up. The value area has crept up. So overall, buyers and sellers are more comfortable buying and selling in this range than other ranges of Bitcoin. Overall, this is a neutral overall zone. All right, getting back to how we trade on the daily time frame. All right, so for myself, a little bit of chop for me coming in today. A little bit of chop for myself coming in today. We closed below the baseline over here on the exit signal from the 20th of April. We put in a doji candle, and now we have pushed right back up to the level which we have sold off. So this for me is going to be a signal depending on today's daily close. This is going to be a signal for me. I don't have risk on exposure to BTC at this point in time. I was simply hedged. This, if we close in this fashion, would be a signal to unhedge that we actually do have the potential. I won't really be seeing risk on ability until we get a daily close above 71.42. Then I will be looking for higher prices moving up into the 7,600s and the 7,800s. But right now that hasn't occurred. So I'm looking to see how the daily close ends. Now, there was some good volume and some good volatility coming in today. On the lower time frames, it does look like a short-term selling opportunity, and we'll see if we can actually hold the level that we pushed off of, which is about 6,900. So we'll see that here in just a second. Did not end up getting any signal from the bottom feeder algorithm on the recent ranges. Again, we are on the Bybit chart. The last bottom feeder algorithm fired on the 29th of March. All right. Minx had signaled for a short on, let's see here, 2 days ago. Now, it was actually yesterday's close. Parallax is still bearish. Waddah is giving us some converse information. Anyways, with a rising explosion level and positive volume delta. So overall, conflicting signs, which is exactly why I'm not in a risk on position. So we'll see exactly what occurs if we end up getting that closed above 71.42. My confirmer parallax is not there. Hopefully the audio is synced now. Let me know if the audio is not synced, guys. Apologies for that. There we go. Thank you very much. All right, let's get down into the 4-hour time frame. 4-hour time frame, looking at the meso trend, we have broken above the meso baseline. This is a good exit short indicator, as well as potentially moving the long trend, or excuse me, the meso trend to the bullish side. We have gotten a pretty steep doji, hanging man candle. It's not a hanging man candle, but excuse me, a reversal setting on an inverted hammer candle on today's 4-hour on the current 4-hour candle, right? So we got about 2 hours and 34 minutes to see if this does end up retracing. What is nice about this, utilizing the entry qualifier for the 4-hour system, would have told you to be very cautious because we did end up closing above the entry qualifier. So to wait for a better buy zone if one is looking to go long between 69.83 and 71.03 is the safer buy-in area, and that certainly would have saved you from some drawdown if we do end up getting a pullback here on this 4-hour, which the 45-minute over here seems to be signaling. I'll be looking at that here in just a second when we show the ISIS spot. All right. Renko strategy also has not actually confirmed to the upside yet. We are still in bearish Renko territory on Bitcoin. And this is what's a little interesting, right? Is that Bitcoin and Ethereum here are quite different and divergent. As I said yesterday, Ethereum actually looking more bullish than Bitcoin at this point in time, and Bitcoin consolidating. Hold on, I wanted to go down to the, sorry, here we are on the 4-hour time frame. This is the 4-hour, actually. This is the 4-hour system for the new ISIS spot. We'll be pushing this out. It's in its final stages right now. We'll be pushing this out to the premium members as soon as possible, but calling for a 4-hour long right over here at about 1900. That was a little bit ago. When we get over to the lower time frames, we'll look at the VPSV and look at today's interesting points of control. We can actually do that right now. There's no reason we can't do that on this chart. All right, so here we are on the 45-minute chart. As I said, let's see here. Trading above today's point of control. We're putting heavily traded volume in right now, which is fairly obvious to see from the reversal candle. I would like to see price back above 71.38. And this was the exact point of control that we talked about. This is the point of control where we ended up rejecting from. Now, this wasn't an untested point of control, just a broken down level. We also talked about this single print up here at about 70.64, I believe was the last interesting level that we talked about yesterday, as well as the violent rejection down here. So moving forward today, see, we have an unfilled point of control overhead, which is also, interestingly enough, a violent rejection at 73.10. And this violent rejection down at 65.50. So overall, playing fairly well to the range that I laid out yesterday. All right, Ethereum on the daily. Actually, same thing. We did not close below the continuation filter. So again, for me, flat on Bitcoin on the daily. Or excuse me, flat on Ethereum for the daily. Let's see, no continuation long signal from Minx. Actually, Minx giving the last continuation long signal here and the take profit long. At this point in time, Parallax is still bullish and Waddah explosion is bullish as well with the rising explosion level. So for me, I need to see actually price come back below 160.16 and then back, or excuse me, not 160.16, but where are we at right here with our continuation? 169.87. I need to see price below 169.87 and then back above for a continuation signal or the nice Minx crossover. That hasn't happened yet. Maybe another day or two, which would be good because that'll be justification to see if this is actually a real movement. Or not. So overall, the day for me is fairly simple. If the daily close looks like it is today, I'll be unhedging and getting some spot long exposure to BTC. Ethereum, I'll be flat on. I have other positions open in cryptocurrency, generally shorts on alt BTC pairs, which will be good to see if BTC does put in some good performance here. The other thing that I'll be playing as well, I'm focused as well on the FX pairs and the ETFs that I'm currently trading right now. So let's go take a look at that. Looking at the traditional markets today, again, we did actually have a pretty positive opening and current trading session with the ES, the NQ, the Dow all rising to the upside. The VIX actually falling a little bit. The euro dollar falling right off of a cliff. Gold and silver rallying as well. So overall, a good rally back to risk. The only thing that hasn't done well today is the energy sector as oil continues to plummet. And we can see here more zoomed out after a pretty, and honestly, I want to say that today's rally is important, but if we look at what the Dixie is doing, this is what's interesting. Overall, let's zoom in. Here's the SPY right here. Let's get Quadrigo off. Here's the SPY right here. And look at that huge gap down that we ended up having yesterday. And yes, we have gapped up yesterday and put in, about a 1% gain. It's about almost 2%, I think, at the peak. A little bit higher than 1% on the SPY. But I don't really consider this impressive. And as long as we're below that 282.15 level, the continuation filter there, I'm not really impressed with overall the SPY's performance today, which is exactly, however, why everything else is rallying. But at the same time, so is the Dixie index. And I'd say the Dixie index is rising faster than the actual equities markets are rising, right? So I'm a little cautious of this movement to the upside. It feels very, very kind of fake to me. Feels very fake to me. Now, at the end of the day, I'm going to trade, when it comes to BTC and the assets that I trade, I'll trade exactly what my system tells me to do because it's right more often than I am. But I mean, a couple things here just don't really add up. Don't really add up. All right, so let's take a look at our foreign currency pairs and see what we have going on today in the land of FX. Don't actually have a lot of exposure in FX, just the pairs that we talked about yesterday. The Aussie yen is consolidating above the baseline. Need to see price above 68.629 for a continuation long. The Aussie Kiwi actually might be signaling for a continuation long today. That'll go on the watch list. Good strength coming out of the Australian dollar. Same thing for the Aussie Canadian consolidating above the continuation filter with no continuation signal. The Australian dollar is not signaling a trade at this point in time. The Canadian Swissy is not signaling a trade at this point in time. Neither is the Canadian yen. The Swiss yen, again, we talked about this pair. For me, was not able to short it because of the time lapse between the actual signal and the actual follow through. But the Swiss yen continuing to the downside and still, even today, in the entry zone. The Euro Aussie need to see price below 1.70. Let's see here. The Euro Canadian need to see price below 1.52762 for a continuation short. The Euro Swissy is not there for me. The Euro Kiwi is not doing anything for me. Neither is the Euro Pound. The Euro Yen, I am short on this, getting some nice follow through to the downside, as the Euro Dollar, which I'm short on as well, finally moving in my favor. The Pound Kiwi needs to break above 2.073 for me to even consider longing it at this point in time. The Pound Canadian is pulling back to the baseline for a potential reversal baseline bounce. Let's see here. The Pound Swissy, nothing. The Pound Yen coming back to the baseline for a reversal baseline bounce again. The Pound pairs, except against the Australian dollar, which is extremely strong right now, are overall consolidating, pulling back to the baseline, potentially lining up for an RBB trade setup. Let's see here. Kiwi Canadian seems like it's going to be giving an exit signal today. Dollar Swissy is getting close to signaling for a long. We just need to get our confirmer there on board with us. Let's put that one on our watch list. Aussie Swissy needs to break above 0.61657, but does look interesting. The dollar won is not there yet for me. So really, yeah, not a lot going on in the Forex world. The only thing that really caught my eye was the dollar Swissy and the Aussie Kiwi. The oil trade that I ended up taking, I did short the USO ETF yesterday. There were a couple different ways to do this. There were a couple different ways to get oil exposure. Of course, we talked about this yesterday. Actually trading the NYMEX futures was one potential way to do it. But the other way as well is, of course, to trade the ETF. So the ETF slipping down today, even with Brent crude actually putting in its nice reversal candle. So we'll see what the volatility looks like at end of market and look to take our positions there. Big moving down on the Palladium CFD, right? Which is, I mean, really, really interesting. Palladium, I mean, the whole commodity sector is being hit pretty hard, but I was pretty interested to see this sell off in Palladium. But, you know, Palladium's done nothing but go up for quite a long time. So this was a steep sell-off in Palladium. So this is just really a continuation of that previous trend, right? Giving us the go-ahead for short trades on today's current candle. Let's see here. Soybeans had hit my first take profit. I think we might have come back and hit my break-even stop loss now for the other 50% of my position. But overall, good commodities trade to the downside. XRP BTC pushing up, XRP BTC had pushed up toward my entry level, but pushing back down in my favor now. BCH BTC not doing much, just consolidating below my short entry. West Texas Oil, interestingly, the daily is actually, the CFD on Waddah is actually signaling for the continuation. Excuse me, not the continuation short, but the actual short now. So very similar to, not the same, but USO. They are moving differently. General direction to the downside, though. And as I said, looking at the major industries, looking at the Dow ETF, we need to close above 237.28. Looking at the Qs, we need to close above 213.58 for continuation longs. And the SPY, we need to close above 282.15 for continuation longs. And SH has got to come back up to about 28.05 for us to be looking for that play again. So we need about a 10% movement in the SH, which means we got this roughly 10% band of confidence around traditional indices right now before we look to take another directional trade. Yeah, and of course, everything moving up with BTC today in the dollar pair area. Binance margin. Some of the BTC pairs are looking off limits. TRX looks interesting. XRP BTC was a good short. Again, ETH Bitcoin showing some strength. Let's see here. If we can find anything that looks attractive on the daily. ONT is one potentially to watch. Cardano performing well today. Cardano against the Tether is a potential entry today, which is, since I am heavily stocked to the short side currently, a good opportunity if we are going to flip back up to the long side to be looking for those exposure trades. Stellar seems a little overextended to me. XMR consolidating, looking like it might actually break down, trading against BTC. Dash actually looks pretty healthy on the daily against Tether. XRP Ethereum is losing its shirt, as is BNB Ethereum. Shorting against Ethereum quote pairs would have been a fantastic decision. Yeah, and then we get down into the BUSD pairs, which is meaningless. All right, let's take a look at your guys' questions and chart requests and see what you guys have for today. Okay, of course, challenged investor with a $4.99 tip wanted me to take a look at gold and gold stocks like AU and gold. He said that suppliers cannot meet demand, the opposite of what is going on in oil, where there is overhead supply and not enough demand. Well, let's take a first look at ZAG USD, the CFD. Let's see. So gold. Sorry, why did I pull up ZAG? ZAO. So gold, interesting. Gold actually, the CFD on the daily. I don't know why I didn't spot this earlier. Signaling for a continuation trade, but Parallax is not there. So very similar to, as I said, the SPY, and very similar to Bitcoin itself. Actually, our confirmers are actually still negative. We aren't quite there yet, where we're gonna just ride right in. Where we're just gonna long right into this this trend flip to the upside. Although I will unhedge because that is what my strategy calls me to do. Gold spot prices are in a bullish trend, but we don't have the confirmation to get risk on exposure to them right now. So we can look at other commodity ETFs that track gold. You had said we wanted to take a look at AU. I see AU is actually much stronger because it's not only being buoyed by the precious market, it's also being buoyed by the equity performance, the equities market's performance today. But signaling for a continuation trade above the continuation filter with Parallax confirmation. The only thing I would be wary, actually the Voss predictive filter did not cross under. So this is actually decent. This actually shows like we could get appreciation. Let's see what ATR is sitting at here. 1.92. This looks like we might actually be able to see the AU share bid up to about 37.85 at high potential, 26.945 in the short term, with invalidation basically right back down at the continuation filter at 22.11. Trades like these, because we do have the potential to gap up and gap down, make sure that that you utilize that firm Kraken cryptocurrency position sizing. The other thing that we can track are things like GLD, obviously the major ETF. Same thing, even the GLD major ETF is not quite there yet, with Parallax confirmations still lagging behind. But assuming a recovery from that, and assuming that we can actually continue to flow to the upside, bidding up to 164.53, up to 170 is definitely not out of the range here. IAU, same thing, lacking Parallax confirmation, but potential bids once that comes in from 1671 to 1735. GLTR is not quite there yet. I'd like to see price above 647 before I look for long exposure in this ETF. Currently speculating on PAL. And Joe, here's the thing. Joe is a hard to borrow ETF, but I really wanted to short coffee. And I should have done it on the futures. But I couldn't borrow the Joe ETF. Hard to borrow. Hard to borrow. If anybody's sitting on a bunch of Joe, let me know. It's one thing I bet you guys didn't think about, right? With people not going to work, there's not as much office coffee being made, right? You're far more conservative with your coffee consumption at home, but when you're at work, filling up that decanter all day long, aren't you? Yeah, I see you, employee of the month. Oh, cold brew is the way to go, to Pie Guy. That is certainly the way to go. Yeah, that's what I've been. That's what I've been on for the last several weeks. Bitcoin getting some follow through off the 45-minute sell signal from the Anaysis spot here. Yeah, I mean, short Dunkin' Donuts, man. All right. But good question, challenged investor. And I saw K7 Jixer kick in with his comment that metal supply is low and frozen with high demand, the opposite of oil. Yeah, I mean, I listened to a representative from Birch Gold speaking the other day, saying that, I mean, they haven't seen such volatility in their demand side for a very long time. Going long on applying PTP fundamentals to brewing that caffeines, bruv. Yeah, man. Jake Rezio says, hey, buddy, I've been reading that USO is a garbage ETF and at its core is built to operate in perpetual contango. However, if you look at the chart, the fund goes up and down with oil. I keep reading not to buy, but at $2.50, I'm still tempted. Thoughts? Listen, I think that I don't know if I necessarily buy or believe that. I mean, that sounds like somebody's conspiracy theory. Let's go look at USO. Here's the thing. If it was a leveraged ETF, leveraged ETFs for long-term investment trend towards zero because of rebalancing functions. So non-leveraged ETFs tend to make good investments. Leveraged ETFs tend to make good investments. Here's the thing. Let's zoom out and look at the monthly. Yeah, I mean, here's the thing. I mean, you have to kind of look at its component aspects here for USO. Is it the best way to speculate long-term on the oil sector? Well, I would say, maybe getting a more diversified, if I was kind of looking at DBO, not performing well either. Trying to think of something like the DBE, which is a broader energy sector commodity index, I think would give you more exposure and reduce downside. The other thing that you can do is obviously invest in that SPY index as well, the energy sector of the SPY, which would give you, the equities exposure as well. So you could utilize both to get there. As far as it trading in perpetual contango, I don't know if I necessarily buy that. There is this sentiment right now that oil is like the no-brainer trade. Like, just buy it, man. Like, price can only go up from here. And while I actually do think that, I do think that we'll see while I actually do think that we're going to see higher oil prices and overall higher energy sector prices, I think that's probably one of the most at-risk sectors right now. Like, next to consumer goods, is probably one of the most at-risk sectors right now. I don't really have a strong opinion on that. I don't have any exposure to USO for long-term investment purposes. I don't actually tend to invest in the energy sector for long-term investment purposes because it's not, it's from a long-term perspective, it's something that I understand less than the things that I do buy into. But still tempted to buy. Thoughts? I would say that if you are interested in investing in USO for the long term, you can make something like a 1% allocation to your portfolio. And over time, if you feel comfortable with that, you can average in on the way up instead of averaging in on the way down as something that you're not certain in. The other thing is just trade it, right? Just trade it, pathways to profit methodology. And don't worry about investing. Invest in things that you really believe in. But if you want to buy USO and you have done the fundamental research to make you feel that that is a valuable investment, then I'm certainly not going to tell you to do that. Yeah, Wendy mentioned the XLE, the Energy SPY ETF. Now, I do actually like the XLE Energy SPY ETF. Nunyo Biz asks, "Hey Justin, I panic sold all of my assets at 5,000. Do I have any chance of getting back in without a loss?" Yeah, certainly. So price does not just go up. Price does not just go down, right? It's kind of a Boolean, right? It's kind of a binary, right? Price will, being realistic here, price can either just continue to go up, or it can stop, or it can go down, right? It's a Boolean, right? There's only two directions that the market can go at any given point in time. So I don't think that you necessarily have to worry about price moving to the upside and you missing a movement for multiple reasons. A, because that's statistically unlikely to happen. B, it's also the absolutely worst mindset for investing and trading, right? The fear of missing out mentality is, in my opinion, and I think statistically provably, the worst possible mentality when it comes to investing and trading. Because the first thing that you have to accept about trading and investing is that not every movement is yours. You're never going to be able to get every movement. You'll never be able to maximize your strategy 100%. The best thing that you can ever hope for, is a good enough strategy that you make more than you lose. And remember, if that sounds underwhelming, keep in mind that 90 to 95% of traders don't even have that. Because most traders lose money because they will not accept the fact that A, they have to lose money to make money, and B, that not every trade is going to be their trade. So yes, absolutely. A, we're still in the fair market value area of BTC. And if you're asking if you will be, so if you're asking if you can get back in at the same expense that you got out, so if you sold at 5,000, I can't guarantee you that price will go back down to 5,000 or even below 5,000. I don't know. But what I certainly can say is that there are going to be plenty of buying opportunities for you moving forward, whether or not they were above or below your entry, because that trade is already done and in the past. That exit is already done and in the past. And the best thing for you to do is to sit down and evaluate what your strategy is going to be moving forward and build a lifelong strategy so that you always have the answer to when to buy and when to sell. And our Discord would be more than happy to help you out with that. Copenhagen says, hey, Justin, what settings do I use on Waddah Explosion? Well, to be honest with you, we're running, there's about 6 algorithms that I have right now that utilize Waddah Explosion. And they generally utilize, so they have some different variations, but in general, they use decile or half decile values. So, 5, 10, 15, 20, 25, 30. So the default is going to be 2040. I've become partial to speeding up the channel length because as a confirmer, Waddah works fantastically, but as a volatility filter, which is the rarest indicator out there, Waddah Explosion has a really fantastic function. But I feel that it works better if you're just strictly using the volatility filter to speed it up a bit. So channel length of 10 to 15, I think works very well. When we're talking about fast length, slow length for the MACD calculation, then, 20 and 40, 15 and 30, 10 and 20 tend to work well. It depends on your time frame, right? It depends on your time frame. The general rule of thumb is that the higher the time frame that you have, the lower the numbers that you need, because you don't need to calculate back over as many bars to get an accurate cycle of the market. And the lower time frame that you go to, you really want to calculate over more bars. Your look back period, your N wants to be longer because you're only seeing small portions of the market and on lower time frames. You want to get a good snapshot of really what the overbought and oversold levels are, what the real trend of the market is. Damian Hughes says, what do I think about the CME gap at 8,400? Does that factor in? It certainly does, but CME gaps don't always get filled, right? So, listen, we've got the gap fill up there, man. There is a sector of Bitcoin traders who, hold hard and fast to the gap, right? It's kind of like so CME gaps are kind of like the magical moving average. So I don't know if you guys are familiar with this, but this happens a lot in trading where you will explain a detailed analysis and somebody will come along and say, yeah, man, but have you considered the 96.238 moving average on the monthly time frame, it has never given a signal like this before. And it's like, bro, you have never heard of that moving average until you heard it like just today or the other day from somebody. You know, moving averages are the biggest bias fitting indicator because they can always fit a trade setup or a bias or anything else. It's a meme, right? So, you know, don't be that guy, right? So it can so when you say, is it a factor? It depends on your trading strategy. I think that CME gaps do actually represent an edge if you have a good strategy to take advantage of CME gaps, but I certainly don't think they should be the basis of your trading strategy, right? So for example, right, you should have a default strategy that works without any external inputs like CME gaps or long and shorts ratios or sentiment or any of this stuff, right? And you should trade that strategy. But over time, you will note patterns that you notice in trading. So things such as CME gaps, right? Or maybe moving average crossovers, or this indicator does this thing, or this chart pattern actually forms, or this divergence happens. And this is exactly what I teach my students, that as you notice, as you notice those things, write them down in your trading journal. And after you've developed your mechanical strategy, your if this, then that strategy, you can take those interesting concepts like CME gaps, or moving average crossovers, or other indicators, or chart patterns, or sentiment, or long and shorts ratios, or whatever. You know, anything interesting that you think actually generates a statistical edge when you play off of these things. And you can develop a discretionary rules-based system to trade those things, right? So the way that this would look in reality is you're trading your daily PTP system, and you notice that there's a gap, and maybe you mark these gaps out. And you say to yourself, well, maybe on a secondary account or on my main account, I will now use this as a take profit level, or I'm going to take a reversal trade off here, a discretionary rules-based reversal on this account with these metrics. And over time, you can back test that if you have rules, and you can forward test it with real results. And you can see over time, does this actually give you a better edge than your default strategy? And together, do you actually get better results by running them simultaneously? So that's always my approach, right? My approach to individuals is always build your mechanical system first. Don't worry about anything else, because you're not going to be really set up to capitalize on them, even if they are a factor. And then once you got your default strategy built in, then you can build rules-based discretionary strategies around these externalities. Agency wants to check out UBT, and I think that's the last thing that we'll do. So we want to go pro shares ultra short on 20-year T-bonds. All right, on the daily, getting some interesting volatility. Let's see what the indicator and algorithm think about this. So interestingly enough, we actually did break the bearish trend and basically sold right back down to the continuation filter. So we are actually bullish on this above 140.23. If price were on the daily were to slip and close below 140.23, I would be looking to short treasury notes. But it does actually seem like the global demand for treasury bonds is there, right? That's actually what I'm seeing. It does actually seem to me that the global demand for treasury bonds, for U.S. treasury notes, is there. So, not something that I feel I want to take action on right now. This is not falling into my wheelhouse of behavior. Yeah, I would like to see price below 140.23 for a safe short. And let's see what our indicators are doing. You know, and actually, in all honesty, I would, if I were trading this asset, I would be long on it. I would have been long yesterday at yesterday's close, and I would be in drawdown right now, and I would still be long. Anton Libre says, what do I think about airlines? I think that shorting them a while ago was a safe move, and I don't really want to touch them for probably about 6 months. SQ is not going to be, we can certainly look at the SQ. For Square, for the stock, I want to see price above 61.44 unless you meant the futures. Tyler Z says, what is that shaded area widening your baseline on the baseline indicator, and how do you implement that into your strategy, and how is that calculated? So that is actually a Keltner channel around the baseline, and that is there to serve as a filter. So one would say there are a couple ways to implement that strategy. I don't use it for hedging. I just use the raw baseline for hedging. But for trade generation, if a candle is closing within that baseline channel, then I don't do anything. We need to close above and below the baseline channel, and that helps avoid chop when generating trade signals, right? Now, for hedging, my hedging strategy is built around not utilizing that whatsoever. The BTC CME ticker is BTC1 ! For the continuous contract in front. Other than technology stocks, what other sectors appeal to me the most? I think that healthcare is a good play right now. Yeah. I think that healthcare is a good play right now. Commodity goods are a high risk but interesting play right now, believe it or not. And I'm not really set up to capitalize on them, but bonds are interesting. But the obvious answer to me is the healthcare sector when it comes to looking for long-term opportunities right now. And esports, actually, to be quite honest with you. Or just gaming companies in general, technology companies in general. All right, guys. One moment and we'll do the outro. All right, thank you guys so much for joining me for another episode of Breaking Bitcoin Market Analysis. We covered a lot today. We talked about yet another DeFi hack. We talked about the Bitcoin gold narrative. So I'd really appreciate your guys' comments on that. Please let me know what you guys think in the section down below. When it comes to Bitcoin and the idea of digital gold, I mean, I certainly agree that we're not there yet. And this is what I've said. You know, I had a great conversation with Ansel Linder, who runs Bitcoin and Markets. Make sure to check out that interview in our Crypto Currently segment, and check Ansel out at bitcoinandmarkets.com, where we talked about this idea of the digital gold narrative. And, you know, his opinion, which I think is very, very true, is that the quickest way to achieve that price stability and that really long-term fundamental price discovery is to onboard as much capital as possible into the Bitcoin network, because you know, larger volume generally equals less volatility on average, right? The more liquid a market, liquidity equals non-volatility. The less liquid a market is, the higher it is in volatility. And what we want to recommend Bitcoin to your friends, your family, your grandmother, right? Like, wouldn't you love to be able to go to your loved ones, your friends and family right now, and know with 100% conviction in your heart that you should put your money into Bitcoin because it's safe there? And they're going to look at you and say, bro, Bitcoin just dropped like 50% in a day. How are you going to tell us to put our money there, right? And how would you feel if that happened to them? You know, these are the things, these have been the lifelong challenges of individuals who have been involved in recommending cryptocurrency to the masses and Bitcoin to the masses, right? Something that has been something that I've done for the last almost 4 years now. And, you know, the reality is you need to onboard those who are actually going to utilize this and benefit from it the most. And right now, he argues that excluding the peripheries, excluding those in totalitarian countries, and excluding those in countries with like no economic system or a faltering economic system, you need to bring in institutional players and institutional money, because that is going to increase the liquidity, and that is going to reduce overall volatility and give you more smooth, fluid price discovery and smooth price out so that it's not as volatile. And that's what will make it the better medium of exchange, which is what most individuals are going to utilize it for. Now, having said that, Bitcoin is the best performing asset of the last 10 years. So it is actually very difficult to not make the case. I think the Fed is kind of silly when it says, because it's looking at a different time frame, right? If it just widens out and says, well, if almost at any time in the last 10 years you would have put money into Bitcoin, you would be up. Excluding a few months. All right? The buy and hold return on Bitcoin is an absolutely true thing. And with not only with just the halving coming up, because that's a meme, but with its deflationary schedule, with its fungibility, with its non-confiscatable nature, Bitcoin is the asset of the future. Bitcoin is a good investment. Bitcoin is something to be and feel secure in, right? And price might take a long time to get price discovery, right? We do not see Bitcoin decoupling in the same way that we see gold to a certain extent, but we don't even really see gold decoupling in a more significant fashion, right? The SPY has rallied. The traditional indices have rallied over the last several weeks after completely falling off the map in March. They've largely had a good month of April. And so is Bitcoin. Right? And actually, honestly, what's interesting is Bitcoin had a better recovery than, and so does gold. Bitcoin had a better recovery than the traditional markets. And as the traditional markets begin to recover, we can see that Bitcoin correlating to it, but overall Bitcoin consolidating and losing its volatility. So what does that tell you? That as the SPY was dropping, more money entered into Bitcoin than it previously, right? It wasn't just the fact that it was being bought up off the bottom. It was that it was actually acting as a safe haven asset. Individuals were trusting to stick their money there as they were pulling it out of equities markets. Maybe not everybody, maybe not enough, but some. And that's certainly a lot more than we had during the last market crash in 2008, 2009, because Bitcoin hadn't been invented yet. So the fact that even some people are treating it as a safe haven asset goes to show you how much more room we have to grow. Final thoughts before I go. Watched The Goldfinch last night. Fantastic movie. Highly recommend that to anybody. Really, just beautiful story, right? Beautiful story. And, beautiful story. With that being said, guys, keep your, things to consider moving forward. Mental discipline and an overall discipline is the key to success in this world, right? Eliminate noise, have a healthy body. I've been back to my regular heavyweight exercise regime for the last month now, and I notice a marked improvement in my mood, in my energy level, in my cognition, in my problem solving. And it's absolutely essential, right? Cut the noise out of your life, focus on execution, focus on what matters the most, because that is what you were put on this earth to do. You were put on this earth to be the person that people look to for answers. So be that person. Be the person with the answers, because you're the person who put in the work. And as I said earlier, most traders do not make money. Be the trader that makes money. The reason why they don't make money is because they don't have a system. Right? So develop that system, guys. If you guys enjoyed the content, make sure to subscribe to the channel. That's how you know if new stuff comes out. But actually, you do need to hit the bell icon for that. So make sure to do that while your finger is down there, and smash the like. Otherwise, YouTube doesn't actually share our content to anybody else. Thank you guys for all the support. If you guys have any questions, comments, concerns, sarcastic remarks, or death threats, please leave them in the comments section down below. We will be back tomorrow at 12 p.m. Central Standard Time for another edition of Breaking Bitcoin Market Analysis. Links in the description to everything you could possibly need. Trade safely, everybody.